Well, first of all, welcome everybody. My name is Shantae, and I am the alumni coordinator for Detroit Regional Chambers, Detroit Promise Path. So I know some of you and I have met before at previous events, and I do hope that you continue to join us for future events. So on behalf of Detroit Regional Chamber, Detroit Promise, and the Alumni Association, I want to thank you for joining us today for our second webinar to kick off to Financial Freedom Series. We here at the DRC have listened to the topics that you're interested in, and we're so grateful to have leaders in our community in consulting and banking provide webinars for our financial literacy program. Today, our presentation is on understanding credit. Feel free to submit questions in our chat in the Zoom, and we will ask our guests after the presentation those questions. So stick around for that. And also stick around for some important information after regarding our big prize. So today, please help me welcome today's presenters representing Comerica Bank, Wendy Holmes, Assistant Vice President of DEI, Employee Engagement and Strategic Partnerships, and Linda Nocive, Vice President of National Community Impact Investing and Lending. So thank you for joining us. We look forward to talking to you guys in the near future at the end with questions. Wendy?
Great. Thank you. Yes. Good afternoon. Thank you. Thank you to the Chamber for having us. And thank you to all of you for joining. Understanding and managing your credit is very important. And I think you'll gain some great tips from my counterpart, Linda. But before we get to that, I would like to tell you a little bit about Comerica Bank. We started here in Michigan in 1849. Our headquarters is located in Dallas, Texas. We have over 70,000 employees, with 65% of our workforce being female and over 40% are underrepresented segment. Next slide, please. Oh, I'm sorry. Next slide. So we are located in 6 of the 10 largest U.S. cities, with North Carolina being one of our newer markets. As you can see, we are very spread out and we continue to grow. Next slide. So the final thing I want to talk to you about, a lot of times we get asked, what's the culture like? So the culture, well, our culture is community. So as Comericans, and yes, you heard me correctly, we call ourselves Comericans, we're a family. We support each other through our 11 employee resource groups and the communities that we serve. And the communities we serve, we do that through volunteerism, financial and charitable contributions, and what you all are here for, which is financial education. So with that, I am very happy to introduce my colleague and friend, Linda Nocive.
Thank you, Wendy, for that. Good afternoon, everyone. Can you hear me? I just need a thumbs up or something.
Yes.
Yes, we can.
Yep.
Okay, thank you very much. So again, good afternoon, everyone. This was very important for me to be here. I'm actually, believe it or not, I'm actually in a booth talking to you guys just because I really wanted to be here and represent Comerica Bank. So today, first and foremost, let me step back. Again, my name is Linda Nocive, the G is silent, and I am the National Community Impact Manager for Comerica Bank. And so what that means is I oversee our public purpose investments, which is tied into CDFIs, MDIs, as well as our loan purchase program. And I also have oversight with our philanthropy piece as well, where we actually work with nonprofits in either providing funding, or in this case, what we're doing here today, which is talking about financial, I like to call it financial empowerment. And so today's topic, I am going to focus on credit scores and reporting. So if you want to go to the next slide, please. So in this workshop, what you're going to learn today, obviously, is going to be about exploring the importance of credit scores and reports, learning how to access information about your credit score and report, strategies that you can actually set up to build and improve your credit report or your credit per se, as well as identifying how to protect your credit from incorrect claims and fraud. So If we were all in person, I will obviously ask you this in person, but I'm just going to pose the question. I just want to see it in the meeting chart. So how well do you know your credit score? So A is I know it well, B is I have a rough idea, C is I don't know it, D is I don't know what a credit score is. Don't all respond at once. Okay, so I'm seeing a lot of B's and A's. I've seen a C. I don't know what it is. I'm seeing a lot of, okay, so B's, A, C. So I have two C's. And so I in the next slide and over the next couple of slides, we're going to kind of break down a little bit what credit score is, who the three main people are, and how to not get yourself where you have bad credit. I haven't seen a D yet, so that's really good. So we've stuck around the A, B's, and C's. So that's really good. So if we can go to the next slide, please. So what is a credit score? So basically a credit score is a 3-digit rating that tells a lender how likely they are to repay you or how likely you are to repay them. So you know how they always say never judge a book by its cover. Well, in this case, and we always say don't do that. However, for a credit score, this is actually one of those instances where they actually get to do that. So they don't know you. They're only going to basically make an assumption about you based on your credit score, how well you've paid your bills, from, if it's poor, if it's fair, good, very good, or exceptional. And so throughout this conversation, we'll be able to share ways to have a good or very good an exceptional credit score. Again, these scores, they range for informational purposes as it relates to when you're trying to make some lifetime decisions, whether it's to purchase a car, a home, or things of that nature. These are things that are used to make those kind of determining factors. Next slide, please. So here are some strategies on how to build a credit. So I know some people said they did not know, or they didn't, and they had an idea of, how to go about doing that, right? So first thing is first, you want to open up a line of credit. So whether it's, as a first timer, if you want to go and to a branch and open up like what they call a line of credit, or those unsecured or secured credit cards, just to kind of establish yourself. So first and foremost, let's step back. If you're within the age of, let's say, 16 to 18, you really shouldn't have a hit on your credit, which I will talk to you a little bit about how to go about getting a copy of your credit report. So you shouldn't have a hit. So when you're 18, 19, this is when you want to start. You may want to start early. Your parents may want to help you start early, but if that's not the case for some people, obviously when you're the age of 18, where you can actually start building that credit, you want to try to open up a line of credit. Obviously, you want to request that your payment histories be reported. So as people are getting older, so in the ranges of 25, 26, and you're getting an apartment for the first time and you're not purchasing a home, you want to ask your landlord or, the utilities company, you want those things on your credit report to kind of show that you're making those payments on time. If depending on the certain age, you may want to open up a joint account. Again, this is optional. This is some things that other parents or spouses may want to do in case one of them doesn't have really good credit and they're trying to build it. That's another option of going about doing that. But most importantly, the most important thing on how to build your credit and have a good credit that's consistent is paying all your bills on time, in full, and never missing a payment. If you are going to miss a payment, you want to call the creditor. Trust me when I say this, they want to hear from you. They don't want to chase you. They do want to hear from you to understand and see if there's anything that they can do so that they don't mess up your credit as well. Next slide, please. So here we are going to read about a tale of two friends. So again, if we were in an in-person setting, I will have someone read this for me. So I'm going to go ahead and read this. So Anna and Bella have been friends since middle school. They are both single, but both have steady incomes to pay their bills. Anne and Bella decided to buy homes in their childhood neighborhood. Bella received a loan without any trouble. Unfortunately, Anna has a difficult time getting a loan. When Anna finally gets her loan approved, her interest rate and insurance premiums are higher than her friends. Why do we think why do you think this happened to Anna? Again, if we were in person, obviously this will be a dialogue that we'll be having. So we can't do that. So I'll just go to the next slide and we can kind of talk about that. Okay, so that slide is missing. So one of the reasons why she probably had is because maybe she has not been paying her bills on time. She probably has some derogatory things on her credit. Maybe wasn't paying attention. And so as a result of that, they obviously gave her a higher rate. It was harder for her to get a loan. And when she eventually did, it was much higher for the interest rate and things of that nature. And so now we are here talking about the credit bureaus. So there are actually a lot of credit bureaus out there, but the three main ones that are known throughout the US, the Experian, Equifax, and TransUnion. And so each of these bureaus actually sort of communicate to themselves. So you heard me earlier when I said you never want to judge a book by its cover, but this is one of those instances where that happens. And so that is what these three credit unions credit bureaus are actually doing. So they are based on the information that is from the credit report. So they don't know who you are. They have no inkling as to, anything about you except for what is being reported on the credit report. Next slide, please. And so each of these three bureaus, they use what we call a calculator, so to speak, on how to determine what your credit score really truly is. And so I know it's not listed out here, so I'm going to attempt to sort of break that down for you so you will know the percentages that are used. So the highest of the five is payment history. And that in itself is 35%. So 35% of your payment history is what is used to determine your credit score. How well you've been making your payments, has it been on time, has it been late, delinquent, and things of that nature. That is what is used to determine your credit score. So this is the highest of the 5 percentages that are used. The next one is 30%. 30% of amount owned. So how much do you owe? So let's break it down. So if you had a credit card that was for $1,000, they are watching to make sure that you're using at least no more, or actually less than 30% of that, which obviously will be about 300. So you want to look at it in that light. So 30% of everything that is owned is what they're using to calculate your credit score. The next one is the credit history. How long you've had the history. That one is 15% of your credit score that is determined to use to understand your credit history. And so if you're starting out very new with a secure credit card, or you've had, let's say, Macy's for about a year or 2 years, and you've been very good with it, and somehow someone upset you and you cancel that card, well, what you've just done is actually affected your history. So if you had two credit cards, you've had one for 5 years, you've had one for 2, and you've had one for about 3 months, and you close out the one you've had for 5 years, well, now they start looking at you as someone who has a 2-year credit history because you have closed out the 5 years. So what I normally advise people, because it's happened to me before, is when that does happen where you're unhappy with a particular credit card company, or if it's a merchant, is what I do is I totally pay off the account completely, never use it, and then maybe I may spend like $10 in a year just to keep it open because I really want to save that history. So I would maybe spend anywhere between like $10 to $25, from the card, pay it off when the statement comes, and then don't use it again for the rest of the year. So that is how you get to keep that history. And finally, the other two are 10% of the credit that is used to determine. One is new credit lines that are open. So you don't want to open up a bunch of lines or a bunch of accounts in your credit report. So you want to make sure there's a mix of them. I'm sorry, and the other 10% is the mix. So, maybe some credit cards, maybe a merchant, obviously an auto loan or whatever the case may be. And as you start getting or acquiring more, you want to make sure that you have a good mix of credit that you're actually using. So those are the 5 percentages that are used. So again, it was 35%, which is payment history. We have 30%, which is amount owed. We have 15%, which is your credit history. We have 10% of new credit lines, and then finally 10% of credit in use. Next slide, please. Okay, so now we're back to our dear friend Anna. So Anna just bought a new house, but it's further away from work than her old apartment was. So she needs a new way to get to work. She would like to purchase a new car. She has taken some steps to improve her credit and is not eligible for a car loan. Anna wants to use the loan to get a new car, but she has a problem. She needs someone to co sign. She decides to ask her friend Bella for help. So, based on everything we've talked about thus far, if you were Bella, would you co sign for Anna? I just need to see the responses in the chat, yes or no. Oh, wow. It's a resounding no. I think someone just said maybe it depends, but certainly I think everyone is saying no, no, no. So, which is very good. And so, yes, the answer will certainly be no, because one thing that a lot of people don't understand is when you co sign for someone, it actually is now going to be on your credit report. And if they default, it falls on you. So if that's something that you did not plan for and you helped someone out and then they did not pay it, well, guess what? Now you're responsible for something that you didn't really want to begin with. You now have an additional bill that you did not um, ask for, or because you were trying to be good to someone. So you certainly want to um, make, when you're faced with that kind of difficult decision, you want to make sure you're making the right decision for whoever the individual is. So there is really no wrong or right answer, but to err on the side of caution, more than likely you probably want to just say no, just to be on the safer side. Next slide, please. So now we've talked about the scores and things of that nature. So what is a credit report, right? What exactly is a credit report? So a credit report is a snapshot of your credit portfolio, or profile rather, that includes your credit history, which you've already talked about. The credit report helps lenders such as financial institutions, car dealers and things of that nature understand how creditworthy you are. That is, whether you're likely to repay a loan if you're given one. So if I loaned you money and you are not good at paying back, that's just that's telling them about your character. And so that is what the credit report really does. It really, again, this is where they're judging a book by its cover without really truly knowing if you're a kind-hearted person, whether you wake up on time or you go to work on time. They have no idea of whom you are except for what is on that credit report. And so this is a way for them to make that assumption about whom you are, if you are credit worthy. Next slide, please. So here again is, how do you go about getting your free credit report? I know when I had a conversation with Erin, I wanted to get a gauge as to who I will be speaking to today. And so I think she told me it was a range between 18 to 25. So within that time, that age range, some of you should not really have a hit on your credit. So I would advise that you go on www.annualcreditreport.com and try to see if you can get a copy of your credit. If you do have a hit for something that you did not do, I will provide you a number that you can reach out to, or how to go about disputing. I think it's on here, unless it was taken out, where you can go about to dispute something that is on your credit report. But this is the site that you will go to. So in the past, before the pandemic, which we all know about, you were always advised to get a copy of your credit once a year, right? So if you are someone who is starting out new or you're working on your credit, you were advised, hey, get a copy of a credit from TransUnion, maybe like in January, to sort of look and monitor and see how things are. And then maybe in the middle of the year, so maybe May, June, you want to now reach out to Equifax and get a copy of your credit report. And then towards the end of the year, you want to get one from Experian. Again, it should be consistent. It's never always going to be the same, because not every lender or car dealer reports a certain way. So some may just use Equifax and TransUnion and not Experian. And so you just want to make sure that everything that is on your credit report is accurate. Now, because of the pandemic and what everyone went through, this was a worldwide thing. What has now happened is they are actually allowing you to get a copy of your credit report once a week. So again, this is something that has been going on for the last two years, where you can actually go on there and every single week get a copy of your credit report just to look at it. So again, for those who are starting out, this is a great opportunity to be able to do that. And you can also get this credit report in case, like I said, if there's like a reported fraud and you're trying to work through it and you want to just see how it's been progressing, and things of that nature. If you're ever denied for a loan or a credit application, they typically would send you a denial letter, but you can also request a credit report just to see exactly what they're seeing and why you were actually declined. Next slide. So again, to get your request your credit report from the three bureaus is TransUnion. I'm sorry, to get your credit score. So now one thing, there's a difference between the credit report and the credit score. The score is where they rate you based on that calculation that we talked about earlier, whereas the report is just a snapshot of the history of how you've been doing. You know, if you've been paying on time, if you've been delinquent and things of that nature. And so to get your credit score, you would need to get it from these three bureaus. Obviously, there might be a fee, or if you have a relationship with a bank or a credit union and you're looking to do something, they might be able to pull your credit score for you for free. Next slide, please. So when you get your credit report, like we talked about earlier, that is a snapshot of the history of your credit. These are the 4 sessions you should really see on there. So one, you have the personal information, which is your name, obviously, and your birth date, your social security number, address or addresses of where you've lived thus far, name of spouse and or employer. So that's going to be on the part that has your personal information. Then you have your public records, whether if there's a lawsuit or bankruptcies, judgment, delinquency, unpaid taxes, etc., etc. The third part is obviously the credit accounts, which is, your debt status, if you had something that's open or closed. So open is a revolving account or like an auto that you have that you're still making monthly payments. Those are the ones that are open. Closed accounts is, for example, if you paid off your auto loan, and then it becomes closed because you no longer owe on that, so it's been paid off. So that's those are those things that are on there. And then finally, our credit inquiries. So sometimes organizations, financial institutions, people or agencies, that have requested to view your credit report, it kind of stays on for at least 2 years. And so anyone who has done any inquiries over your credit over the last 2 years, it just show on this session that is considered or called credit inquiries. Next slide, please. So here are some important dates to review. Right, so when you're looking at your credit report, these are the things that you want to review, especially if you think that there may be something fraudulent and you're trying to dispute it. So obviously the day you opened your account, what day was it? Does that sound about right? Was this something that you really actually have or still have within your preview? Dates of delinquencies, if there are any. So you want to make sure that it does match. And if it doesn't, you want to certainly dispute that. Dates of any public records, any records that show something that is open. And finally, dates of credit requests. So those are some important dates that you want to review when you're looking at your credit report. I know it's probably a lot that we're talking about, but the minute you request one and you start looking at it, I do believe that the participant guide has been shared. And so that will be shared with you so that you can actually use this to mirror what you're looking at. Next slide, please. So we talked about earlier about if there was like something fraudulent on your account, or your credit report, and how to go about disputing that. So first thing is you want to write a letter to the credit reporting agency to dispute whatever that thing is. You want to send your letter by a certified mail and request a return receipt, because this is how you're going to be able to keep track. So remember, I told you prior to the pandemic, you could order your credit report. Basically they'll say, once a year, but you just want to spread it out. So if you were working on your credit and you were disputing something and you have them send you a return receipt, you should be able to, when you, at the next time you order your report, obviously you should be able to see whether this is being resolved or whatever the case may be. However, because of the pandemic and you're allowed to get it once a week, it's not going to be as quick as you're thinking. Meaning, if you sent it off and you got a return receipt when you log on or when you requested the following week, you're going to see the changes. It's not really as fast. Unfortunately, I don't work for the credit end of the credit bureau, so I can't really say how long it will take. But you certainly want to request a return receipt. And finally, send any additional letters or anything to kind of dispute what you're doing, and letters to inform the provider that you are actually disputing what is on your credit report. Next slide, please. So if you unfortunately did check your credit history and your credit report and you pulled your scores and you actually realize that, wait a minute, I've not done a good job of this, and what are the ways to go about it? You can, it's not going to happen overnight. So you're going to be able to dig yourself out of it. You're just going to have to take time in doing that. And so here are some steps on how to go about to repair your credit. We've already talked about monitoring your credit report and scores. We've talked about how to go about doing that. The next step, obviously, is the minute you've made that decision that you want to start repairing your credit, and even if you don't have bad credit, but you want to maintain a good and satisfactory credit, you want to pay your bills on time and regularly. You certainly want to do that. And if for some reason you're going to be late, do reach out to them to let them know that it's going to be late. If you find yourself where you actually need credit counseling, there are some free credit counselings out there. I think it's on this slide. If it isn't, it's on the participant guide. I know that here in Michigan, there is one called Green Path. It's a nonprofit. Again, I am not advertising for anyone, nor do I work for them. However, it's one of the ones that stands out. It is in Michigan. It's called Green Path, and they have been known to help low to moderate income individuals or people who are low earning to either set up a plan on how to repair their credit if it's they need to file or whatever the case may be, in terms of trying to, if it's a bankruptcy or whatever, they kind of help you do that on their own. It's an organization that Comerica has supported over the years. And finally, you want to consider financial products. So we talked about maybe getting an unsecured credit card or a secured credit card and sort of making those monthly payments to start letting it show on your credit report that you're making those payments on time. Next slide, please. So there's nothing we can say enough about fraud, right? So there are always going to be some people who are out there who are going to try to scam or find ways to sort of find a way to take advantage of people who are very vulnerable. And so the Credit Repair Organizations Act was established to protect your rights as a consumer. So it prevents credit repair organizations from engaging in false advertisement and deceptive practices that can harm you. So here you are, you're trying to work on your credit, or you're trying to repair it, and you have some people who are actually trying to take advantage of you and make you pay for things that you probably shouldn't pay for, things that are actually available to you that are free, such as getting a copy of your credit report. So that's what this act was put in place for, to protect consumers. Next slide, please. So here again is our dear friend Anna. So I'm going to read this again. So to improve her credit, Anna researches several credit report companies. The first company promises to remove bad credit information from Anna's report. All she has to do is pay an upfront fee. Anna is worried about her bad debt, but the company assures her that it can scrub all negative information from her credit report. The company also advised Anna not to contact the credit bureau directly, since doing so will negatively affect the company's efforts. Did anybody point out any of the red flags before we go to the next slide? Did anyone notice any red flags? And if you did, how many did you think? I'll give you time to kind of go through this again. Okay, so 2. I heard some. Okay, so Aaron said 2.
Yeah, them telling her that
That's another
they'll
2.
clear it up front and saying that they'll scrub it from, remove the bad credit in general. Like, they can't do that, right?
They cannot. You're absolutely right. So we're going to go to the next slide and kind of discuss that a little bit more. So thank you. So I'm seeing 2, 3. So here were some of the red flags. So some of you guys almost got it by saying 3, but it's actually 4. Actually, it's more than that. So a request to pay upfront fee for a credit repair services. That was a red flag. A promise to scrub all negative information. Well, if it's a legitimate, you know, there's no way for them to remove it. It's if it's legitimate. It's when it's not legitimate, or there's an error, or there's a fraud on your account. That's when you're able to dispute that. A promise to scrub or alter legitimate information. Again, that's another red flag. A warning not to contact the credit bureau directly. Again, I said it's probably like 2 or 3 slides earlier. You are entitled to dispute errors for free. It's your legal right. Other signs that may happen, we didn't see here with Anna, but if they ask you to sign a blank sheet of paper and there's nothing on it, they can put whatever they can. You've already signed it. Credit profile number scams, fake social security card number, fake social security number scams. So there's a lot of different ways that people are looking out there to scam people. But for this particular instance with Anna, there were 4 scams that were highlighted. Next slide, please. So again, we talked about credit counseling. I didn't know it was going to be on here. So I talked about Green Path. So here are 2 other ones that are national. You have the National Foundation for Credit Counseling, which is www.nfcc.org. And then you have the Financial Counseling Association of America. Again, that is www.fcaa.org. So they will do the exact same thing, just similar to what I talked about Green Path does. Green Path is actually here in Michigan. Next slide, please. So here are some strategies. We've talked about, if you're disputing it, how do you go about repairing? How do you go about rebuilding? So here's another way for you to improve your credit, right? So you want to, again, I talked about that earlier when I was talking about the percentages of how your credit score is calculated. So you want to use less than 30% of your available credit. So you want to figure out everything that you have and figure out what is 30%. If it's more than that, that is okay. Just, start paying it down and paying it down all the way through until you get to at least 30% of that. Do not, I know it might sound great, and some of you might be preparing to go away to college, and do not max out your credit cards. When you go away to college, I know there are going to be so many different offers. You want to certainly make the right decision. You may need 1 or 2 credit cards, but you want to make sure that you are disciplined and responsible and making sure that you're going to pay those bills. If you order pizza and buy it for everybody, understand that you are responsible. It is not free money. It is a credit card, meaning you have to make the payments every single month. Pay your bills on time. I cannot stress this enough. You need to pay your bills on time. Pay off your credit card bills each month in full if it's possible. If it's not, that's fine. Pay the bare minimum or maybe even more than that, but you want to pay it off on time in full if possible. Pay off your loans on time. If you find yourself in that space and you have a car or whatever the case may be, pay your loans on time. Do not apply for multiple loans and credit cards at the same time. That affects your credit score. That is a lot of inquiries. And remember, that stays on your credit report for 2 years. So you certainly want to this is where you make those decisions that this is one of credit and credit scores and credit report is one of those decisions that if you make the right one, it will pay off for you in the long run, whether it's getting lower fees or, in some instances, no interest for a very long period of time. This is where you get to make those type of decisions. Make a financial plan or a debt management plan to reduce debt. So in my house, what I do, I know this is very old school, don't judge me. I actually have an Excel sheet where I actually listed out everything that I spend every single month. And so if I go splurging, I know where I made that instance. You certainly want to have a way where you're able to manage your debt and in a reasonable way. Create and follow a monthly budget. Trust me, it does not hurt you. it's going to help you in the long run. It's going to help discipline you. It's going to help you be able to see where your money is going. I know there's a lot of apps out there. I can't remember all of them, but there's several apps out there that have a built-in monthly budget that can actually help you as well. And finally, we talked about obviously reviewing your credit report for accuracy. You certainly want.
Again, if any of the trash is
I'm
too
sorry?
full. Yeah. Always.
I'm sorry? I'm sorry. I think someone said something, but I don't know if I really quite heard them. Was that a question?
I believe they unmuted in error.
Oh, okay. All right. So finally, like I said, we want to certainly review your credit report for accuracy. And again, now they have it where you can actually do that on a weekly basis. But obviously, if everything goes back to normal, if it ever does, I don't know if it will. But at least you know you have the option of getting a copy of your free credit report. Next slide, please. And so in total, or in summary, what we've learned today is obviously how to understand and improve the importance of, actually how to understand the importance of your credit scores and report, how to access information about your credit reports and scores, how to identify strategies to build and improve your credit, and finally, how to build and protect your credit from incorrect claims and fraud. And so with that, I'm going to hand this back over, and so we can answer any questions you may have. I know we kind of went through that, but I'm hoping that if you have any questions, I'll be more than happy to help you.
Thank you so much, Linda. And at this time, we will start answering asking questions that you guys have asked in the chat. Feel free to continue to send those for a few more minutes. So one of the first questions that we have is, how is it viewed when your account is shut down via creditors? They cause it to go out of business or transfer. Let's read that again. How is it viewed when an account is shut down via creditor cause? I think they say because they go out of business or transfer.
And so you still have to make your payment. So here's a perfect example. I had a Best Buy account. And was it Best Buy? I think, I'm not remember. I think it's Best Buy. And they sort of went out, or I can't remember which account it was, but they transfer it. I just made my payments. It was still taking the money until it was paid off. So they have things that are worked out, whether someone, maybe they sell those accounts over to someone else who would then now collect the remaining balances. But if they go out of business, they have things in place where they will still collect from those who owe them. But that's
Okay.
a great question.
It
And then
is.
when you eventually pay it off, it will show closed.
Very good question. Another question or observation is that I notice companies may use two different scoring methods, FICO or Vantage score. Is that something that we should be
Yes,
concerned about?
Vantage. Yes.
Is there a difference?
No, you shouldn't be concerned. No, there really isn't any different, but I think the one that most people are familiar with is FICO score. And so that's the most popular one. But yes, some may use Vantage, but it's the same thing. Their numbers are just a little bit different per se. So I think and I just need to go back to that. So just give me a second, please, if you don't mind. I don't have the slide with me. I'm actually somewhere off site. Because I think did we have it? Okay, so if we don't, I'm trying to see if we had it or not. We didn't. Okay, so for FICO score, so I'm going to read off the numbers to you, right? So for FICO, very poor is 300 to 579. Fair is 580 to 669. Good is 670 to 739. Very good is 740 to 799. And then obviously exceptional is 800 to 850. So now if we move that over to Vantage score, again, that one, it starts off at, it's literally the same range, but it's just like some are a little bit off. So for poor is 300 to 549. Poor is 550 to 649. Yeah, 649. Fair is 650 to 699. Good is 700 to 749. And then excellent is 750 to 850. So just a few things that are a little bit, that varies in them, but it doesn't matter which one is being used. But that's a very good question.
Awesome.
And I
Thank
think
you.
there's another question in the chat. What
Yep.
is a good credit score? Yeah. Okay.
Yep.
Go on, I'm
So
listening.
I have one that came, which is, they're too similar, so I'll give you both. What is a good credit score to get started with as a college student, one with low rates? And then another question that was submitted in direct message was, what are some good credit cards that have great benefits to start? So it's a similar question.
So I think one of the questions first was, what's a good credit card to start with?
Mhm.
If you have a relationship with your banker, or if you have a relationship, or one of your parents have a relationship, that's something that you certainly want to look into. Again, I don't work for the credit card companies. I hear great things about Capital One, especially for students. I think it all again depends on your credit score and what that really truly is. But you certainly want to do your own investigation and see what exactly do you need it for, and what benefits are you looking out from that card. If you're able to determine that, then you're able to decide what is the best one for you.
That makes sense. If you have a card and an app for the card connected to your account, is it best to pay it off the second pending balance? It's available to pay off before the monthly statement. So is it better to pay off the balance that's pending or the one before the monthly statement?
I'm sorry, say that again. If you have
If you have a
an
card,
account and you know what the payment is, to just pay it.
yep, it looks as though that they're asking if you know that there's a pending balance, should you pay the one that's higher versus the monthly statement?
So that's, I think I talked about it earlier on, where I said, if you can pay it off in full every month when you use it, just do that. If you don't, I would say pay the minimum while you're trying to pay it off. Does that make sense? So if you're spending, so I always tell people, when my nephew started his credit card, he was mostly using it just for like gas. So roughly he would maybe spend close to like $100 or 120 a month. So that was something relatively that he could easily pay off. There were some instances where he would go over, maybe he went out to dinner or had some other things that came up, and then he would just split the payment, meaning maybe if the payment is $25 a month, he would maybe pay, and it was like two something, he would pay a certain amount, and then the following month maybe not use the card but pay off the remaining balance. But you always want to pay more than the bare minimum.
Okay, thank you. And this one is it best to get a credit card affiliated with your banking institution?
Not necessarily, because then again, it depends, right? So if you're going away to school, and let's say you're going to Alaska and you have an account with Comerica Bank, you there is really no Comerica in Alaska. So you want to make sure that you're finding a card or something that is going to work for you. So if you, credit cards are a little bit different because you can use it everywhere. But now I'm talking more about like if you're going to use like your debit card, you also obviously understand that there are charges if you use an account, your card, gonna be charges. So that's a conversation for one that's convenient for you. These are really great questions.
Awesome.
Any questions?
Any more questions? Give you a minute or two to submit.
And I'm gonna come on camera so you guys can see that I'm in a booth.
I love it. We have a minute or two for any more questions.
Are there no other questions? Okay, I'll ask.
Alright.
I may start
Wait a
calling
minute, I
out some
see,
names.
did we ask this one
Okay.
question? I see one from an Iris Perez. What if we don't have enough credit and who do we talk to see our
Mhm.
credit? Did we ask that already?
No.
Where do you see that?
In the chat?
Where do you see that?
In the chat?
And what was the question?
What if we don't have enough
Yeah, can you read it out,
credit?
please?
Can you hear me?
Mhm.
It says, what
Yeah, I
if
can hear
we
you
don't,
now.
okay, what if we don't have enough credit and who do we talk to see our credit? Oh, she must have sent it a direct message
So
to me by
that
mistake.
goes back to,
Oh, I got it. Yep.
okay.
Yep.
So that goes back to, yeah, she just put it in the chat. So thank you
Mhm.
very much for that, Wendy. So that goes back to what I was talking about earlier, where I said, you know, you want to sort of have a relationship, or you know, if you don't have any credit, and you know, if you're starting out, you're really not going to have any credit. So if you've never had any credit and you've not worked on it and you're now 18 and you're starting life, or just starting life, you're not going to have any credit. So how you go about that is getting that, like I said earlier, um, you know, an unsecured credit card. Work with a bank or a credit union to sort of get one. I think there's something where, if I mean, memory serves me, where I think you could put like $500 in, and then they'll give you like this card, and you make, you know, as you use it, you make monthly payments. And I think after a while, and don't quote me on this, it now becomes a secure card where they will actually give you your money back, and now you have slowly started building up your credit. So there's no wrong time to start. With my nephew, what I did when he was, I think, 15 or 16, I just added him to one of my cards, and that sort of started helping him build his credit. I have a 3-year-old daughter with my husband, and so while she has accounts at a certain age, we're certainly going to do the same thing with her, so that she can start sort of having some sort of credit, so that by the time she gets to that age, she is a bit established. But that is a great question.
Thank you.
Any other questions? Okay, so I'm going to call out names. Olatunji, name something that, what are one of the things we talked about on how to go about building your credit? I think I said the name right. I think I should be able to say that name right. Olatunji, is there, I think that's what I'm reading here. Anybody want to take a stab at it? What are some ways to go about building your credit? What are some methods we talked about?
Get a secure credit card.
Okay.
Uh,
And who said that?
This is Leonard.
Okay, Leonard. Okay. That's a good way to get a secure credit card. We talk about paying your bills on time. We talk about monitoring your credit report as well. Those are great.
Linda, we
So
have
I'm going to turn
another.
this over to you, Miss Kane.
Oh, thank you. We have a couple
Oh,
more
okay.
questions that came in. So let's see what we got here. We have how
Oh,
often
okay.
should you check your credit score?
Your score, I will probably say maybe one. So now remember, your report and your score are two different things. So I would say your score, remember that they may charge you for that. So I would probably say have either your bank or credit union, typically credit unions, they can actually run that for you. I will probably say maybe once a year, just to get a good gauge. But you want to keep monitoring your credit reports just to make sure that nothing has changed or nothing is on there that is fraudulent or that you're not aware of. So your credit report, certainly you want to check that more often. I'm sorry. Yeah, your credit report, you want to check that more often just to make sure there's nothing on it. For your scores, if you're not really doing a lot of activities, I will probably say once or twice a year. But understand that there are probably going to be charges. Great
Awesome.
question.
And then the last one for today is, what is the difference between a hard inquiry and a soft inquiry?
So a hard inquiry is, so if you were to go to a car dealership, or if you were to actually make an actual inquiry about something and they actually pulled your report, that's actually a hard one that they've actually done. A soft one is sort of the ones I talked about, where some people, some financial institutions or credit companies may do like a soft pull on your account just to see. So you just get those, you've been pre-qualified or pre-selected. They may have done a soft pull on your account, or your credit report, just to see if you fall within the line of whom they would want to offer a credit card to. Sometimes auto dealers also do a soft pull as well, just to get an idea. But what you don't want to do is you don't want a hard pull, like for different things within a very short period of time. That does affect your credit. Those are very great questions.
Then I have a question for you. Can you stop the, can you have the soft inquiry stopped from being pulled on your credit report? Period.
So I believe yeah, so you can do, okay, so what you can do is you can actually place a lock on your credit, where if anything happens, they would need to contact you. So what that becomes a pain. So if you were to apply for a loan and a home mortgage, and they will have to contact you for every single thing. So that's a way that you can put a stop on it, where it's like, you can place a block on it, on your credit report, where they can't do anything without without calling you to confirm if it's you that's actually making that inquiry. So you could do that. It's just you want to also understand that somewhere down the line, remember, if you apply for a house loan, remember that somebody's probably going to have to call you to confirm that you actually did do this. So there's a block you can put on it. And if anybody tries to go into to pull your credit, there's a sign. Basically, I don't know if it's a sign. I used to be an underwriter where you couldn't do anything. You had to actually call the individual and they had to give you like authorization that you know, that you give them the authorization to actually pull your credit. So yes, there is a way to go about doing that.
Thank you.
There's one more question that came in on the chat. It is, would you consider credit a must-have or investment?
I think it's a little bit of both. So those are both great questions. I think it's a little bit of both. Credit, obviously, that's how decisions are made. That's how you're able to buy things, large things, if you want to make a purchase. Investments is something that you want to start off early on. Maybe just start off and understand it. I know everybody is big on crypto, on Bitcoin and everything else, but you just want to understand how to go about investing. So savings is an investment. Maybe you buy a CD. You have like $1,000 or $5,000 that you're like, I'm not going to use it for the next 6 months to a year. Maybe you purchase a CD or a bond that kind of just grows a little bit for interest. So you want to understand the market. I would say if you can do both, do that.
Linda,
very great question.
Oh, yes. Linda and Wendy, we are definitely going to have you guys back for more questions. And everyone, as you see, Linda's information and my information are up on the screen. So if you have more questions in the interim, please feel free to send them to us. This has been an amazing presentation. And I just want to thank you, Wendy Holmes and Linda Nosby, for joining us today. Once again, this is just part 2 of our 4-part series for our kickoff to financial freedom. For every webinar that you join us at, you will receive an entry into our giveaway for a free Chromebook. So make sure you register for our next one so that you can have more entries. The winner will be announced in March, so look out for that. Once again, we have our next session next Thursday at 3 o'clock. Managing your student loans. So this is a great segue into that. Once again, another way in which you want to make sure that you have your credit and your information accurate and that you're on top of your financial freedom. So once again, I want to thank Wendy Holmes and Linda Nosby for joining us today. And thank you guys, and we hope to see you next week.